Most traders will just wake up in the morning and start trading the market without knowing that the market moves in section, precision, and in timing. Now, in this video, I'm going to show you why I choose Gold and GBPUSD to trade them only in the London section using the London Killzone strategy. I'm going to show you everything, how it works, the entry model, and its win rate percentage. Do you understand? So if you're new to this YouTube channel, please kindly like, subscribe, and share this YouTube channel to others so that they can also learn from this particular video. Now, in trading, we all know you're not a beginner anymore if you already know that we have three sections in trading. Then you are no more a beginner. We have more than three sections in trading. I think we have the New York section, the one I can remember. I think we have, first of all, this one should be the Asian section. This should be the New York section, London section. This should be the New York section. This should be the Tokyo section, overlapping with the Asian section, while the London section overlapping with the New York section. You understand? So let's take all this off. So after seeing all this, we are going to be focusing on the London section. Why? Why are we focusing on London section? We are focusing on London section because London section has the high probability in liquidity movements or in volatility movements. You understand? Price might be involatile during the Asian section, but when it comes to London section, the volatility in London section is so high that you as a trader can be able to compose or see a very clean setup that you are going to be following, or a very clean pattern that you need to just to be repeating it every fucking day. You understand? Now, when it comes to precision, just like consistency, for you to be able to trade this particular one setup every day by day, back to back to back, without missing any day, because you might miss a good trade today and the next trade that you're going to enter might be a very bad one. You understand? So nobody knows. Okay, so when it comes to timing, for those of you that are workers, you go to work and sometimes you don't really have much time to be looking at the market. You just need a few set clockwise time that once it's this particular time, you log into the market or you log into the chart and see or analyze, see what you're looking for. If you not get what you're looking for, you log out, as easy as that. So now, first of all, you need to know is the timing. The timing in this particular section. Okay, I've already told you guys that we're focusing on the London section. Okay, London section. Now, after focusing on London section, I'm going to focus on the timing. The timing. In the timing, we'll be using from 8 a.m. Yeah, London section starts from 8 a.m. Nigerian time. 8 a.m. Nigerian time. So convert it to your own country time. So from 8 a.m. Nigeria time, that is when we'll be looking for a certain movement in the market, a certain volatility, or a certain liquidity grab, or a certain pattern in the market. Remember the time from what? From 8 a.m. in the morning. Now, this is what price probably do and repeats every fucking day. This is the Asia section. The Asia section usually occurs from, I think, from 1 a.m. to 5 a.m. 1, 2, 3, 4, 5, 4 hours. Yeah, from 1 a.m. to 5 a.m. Now, in between that 5 a.m. to 8 a.m., it's like how many hours? 5, 6, 7, 8. Just like 3 hours. This is just a pre-London section. This was a preparation for the main Ogakoko, for the main London section Ogakoko. You understand? So this is our Asian section. This will be our London section. Yeah. Now, this has already become a pattern in the market that at the beginning of this pre-London section, which means this gap in between here, price is likely to sweep below or sweep above. Now, what is your what is your this thing as a trader? What is your work as a trader? Once price is able to sweep below, yeah, we are doing what? We are buying. If price sweep above, we are doing what? We are selling. Listen, it's not that easy. Yes, it's not that easy. We have so many things, so many rules to follow. You understand? Now, first of all, I'm going to make sure that I break everything down for you in bits and in particles. You understand? So, I'm going to create so many scenarios. So you are going to understand what I mean by so many scenarios. But before that, let's talk about the entry model. Which entry are we moving? Are we using? Now, we'll be using something like this. If price sweep below, we'll be using something like a double bottom, a change of character, a rotator to this other block here, and boom to the upside. This is our entry pattern that we'll be using. You can also call it a turtle soup pattern, as you want. So if it's sweeping above, is it? This is the entry pattern that you are going to be using if price sweep above. But we have so many scenarios, you understand? So I'm going to teach you scenario 1. Now, in scenario 1, this will be the Asian section and the London section. Now, sometimes you wake up in the morning and see that price has been ranging in the Asian section. Ranging. All of a sudden, price swept above. In the pre-section, remember, timing matters. In the pre-section, even before London opens. So, London hasn't opened yet, but price already swept above and gave us a clean entry for us to do what? To start selling from here. As a forex trader, this is a trap. Yes, this is a trap. You can't start selling from here. Number 1, the main reason is that London section is not yet open. So why are you selling from here? The whole setup and everything formed in the pre-section from 5 to 8. That is a trap. We are looking, what we want is that all this section, all this entry model section should form inside the London zone, inside the London opens. So once London hasn't opened yet and this everything, all this setup formed is a trap. Stay out of it, because look at what you're going to see. Once London now opens, you will now see a rapid growth. Price will just, you're already selling from here. Price will take you out and maybe reverse here, push to the upside. People that are trading breakouts will be happy. Price will take them out too again. Come here and do what? And start going down. Price moves in so many mysterious ways. You yourself can't tell. Do you understand? So, the key point in this particular scenario is that the setup and everything should form inside our London kill zone, inside the particular zone, inside this zone. This is a scenario A, which is a failure. I'll show you scenario B. Now, in scenario B, this is our normal Asian section and our London section. What are we looking for? If price should range in the Asian section, give us our range. Market opens, price give us our sweep of liquidity high and retraces. New York section, London section opens already. Price give us a double bottom and give us a change of character here inside this New York section. Price ask New York. Oh, I'm very sorry, guys. Inside this London section, price give us a change of character. Then we are going to be marking our order block from here as our entry. So once price gave us this change of character inside this London section, then our order block entry will be here, which means we are going to start stacking in our entry from here with a little bit above this double bottom. Remember what I talked about you guys about liquidity? Above this double bottom, I think above here, yes, and this should be below here, and this is what we'll be expecting for price. Everything should be inside here. Price will just tap us in, give us a little movement, and boom to TP. This second scenario is what we're going to be focusing on, and the two pair we'll be focusing on is the GBP-USD pair and the what pair again? Which pair again did I say? I said the gold pair. The gold pair. Do you understand? Remember, timing, section, and precision is the key important this thing here. Now, if you are looking for how to get your indicator, you can use this indicator: ICT, section, Killzone, boxes, and deviation. You can use that indicator. It will help you get what you want. Now, in the timing, we'll be using our 5 minutes time frame, just a mini scalping strategy. This is a clear scenario of price. Yeah, this is our sweep. This will be our sweep. Price swept above this candlestick or this candlestick and gave us a change of character. Now, some of you guys should be stacking in your buy, your sell from here, because this is our order block, right? Listen attentively. Listen attentively. The momentum in which price pushes to this particular area is so high. You as a trader, you need to understand this by now. Price moves in momentum, you understand, in volatility. Now look at see. You see how price has been spiking, showing you that the buyers are in the market, pushing the market up, and they will not stop here because of your order block. They will not stop here. They will keep on doing what? Pushing to the upside. That's why this trade is going to hit your stop loss if you took this trade. You understand? So, assuming all these candlesticks are just flop candlestick or candlestick that are just moving sluggishly, then it will be considerate. Let me show you what I mean by that. What do you have here? We have our sweep here. This is our sweep of liquidity. And we have our change of character to the downside here. This is our change of character to the downside. So this will be marked as our order block. Now, can you compare this movement to the other movement? No. This movement only has one push up of a bear or bullish candlestick. Only one. But that one has more than 5 in one particular row. The momentum is too much in that particular one, but not in this particular one. You understand? This is a slow momentum. Just a little movement and boom, and again another little movement. This will show that this is the A+ setup, and you don't need to miss something like this. Then after the London and the New York Open, what you see, what you saw here, boom, price pushed to the downside. Let's look for another scenario again. This is another scenario here. Now, in this particular scenario, what do we see? You can see this is a sweep of liquidity to the downside. Yeah. Price swept that liquidity to the downside. After sweeping liquidity, price gave us a change of character. Everything happened inside the London section opens. Price gave us a change of character, and our order block is being tapped. This is our order block here. The last bearish candlestick before that bullish movement is our order block. After price tapped it, what happened next? Price did what? Boom to the upside. Our stop loss should be below here, and price dished out to the upside. As easy as that. Okay, if we are going to do this on gold, it's going to take much time, and I don't want this video to be long. See you guys in the next video. Peace out.